Hey, very good morning to all our viewers. Welcome to Hot Stocks right here on ET Now. Ahead of Infeed results, the market is completely sideways, 59.75, not moving much from yesterday's close.
Yeah, I don't know how much of takeaway would the Infeed results really provide for the markets this time around, but yeah, it's quiet for sure today. Not just for the large caps, even the mid caps, fairly muted action both on the mid caps and the small caps. I mean, yeah, there are a handful of stocks in the small cap space which have done well or which have done otherwise. For example, Inertia International slides down 20% today. The volumes are very thin there, but so that's gone off. A couple of other stocks like Parekh, Illuminex, which have gone down as well today. So there are select stocks which are not having a good day. Balrampur Chini from the mid cap sugar space is down close to 4.5% in the session. Should pull up a Renuka as well, was in the ban yesterday and entered the F&O ban yesterday and was corrective and is corrected in today's session too. So yeah, select stocks are seeing pressure. Large caps, Tata Motors ruling the roost, still higher by close to 5 or 6 rupees in today's session as well. So that's one stock that has done meaningfully well today.
Let's talk about what brokerages are saying this morning. UBS has upgraded Reliance Power sell to neutral rating, from a sell actually to a neutral rating. Brokerage has also upped the price target from 90 rupees to 110 rupees per share. Recent underperformance of stock makes valuations reasonable. UBS says that the overhangs on fuel linkages remain, but bad news seems to be reflected in the share price. Brokerage has raised DPS estimates by 6 to almost 16% for FY14 and FY15. In the meanwhile, Nomura has upgraded Punjab National Bank from reduced to buy rating. Brokerage has also upped the price target from 710 to about 1100 rupees per share. Nomura expects loan delinquency to decline into FY14. Expect loan delinquencies to improve to about 3.5 in FY14 from 4.9 in FY13. Brokerage expects Punjab National Bank will benefit from MTM gains on its bond portfolio as bond yields decline further. Let's get in what dealers are suggesting this morning. As always, Darshan Yathin join us with a quick perspective and then quick roundup of chats from dealing rooms. Darshan, come to you first. What are you picking up from your sources?
Well, Tanveer, BHL is down in the red today because, of a development that happened. Clearly, they have stopped supply to one of the projects of Indiabulls Power, and this is in the phase 1 only because the finances did not come in by the company, by Indiabulls Finance, so BHEL decided to stop the supply. Quite a few negative reports have come in on BHEL indicating that, this is just the phase 1 and, there could be some bit of order book concern because phase 2 is not yet started and that could maybe get cancelled. So clearly, 2-3 reports coming in. Citi has maintained a sell target price of 200, Barclays the target price of 197. So all these reports coming in on BHEL, which looks rather negative. The next counter they're speaking about is Mphasis, and which dealers are recommending to accumulate the counter at lower levels. So Mphasis is something that it's more of a positional call to accumulate on declines. And the last one is Tech Mahindra, in which dealers are indicating that HNIs are actively accumulating the stock. So levels of over 1000 is something that dealers are seeing on Tech Mahindra soon.
Okay, 960 currently is Tech Mahindra. Thanks a lot for that. Darshan, to Yatin now. And Yatin, what are your dealing room sources telling you?
Well, Neeraj, ICICI Bank is witnessing some bit of selling pressure in today's trading session. However, the cash volumes are not that, big, but we have the future and options segment for the company, which has been really active. On the back of the news that Pardhaman Chemicals has sued ICICI Bank in Australian court for various irregularities relating to Lanco infrastructure case. So clearly, there is some bit of negative news coming in on the counter, and that is where some bit of selling pressure is what dealers are anticipating in ICICI Bank. Also, the bank nifty looks weak to most of the dealers. Coming then to Syntex Industries, and the company will be announcing its Q3 results today. As we had mentioned earlier, most of the dealers are anticipating that the top line and the EBITDA growth for the company will be quite strong. Of course, there will be some bit of adjustment in the profit figures that needs to be adjusted. But apart from that, EBITDA, a 15% growth is what our ET Now poll is suggesting. It could be possibly higher than that, is what dealers are indicating. So accumulation is what dealers are doing at this point in time as far as Syntex Industries is concerned. And finally, we have Magma Fincorp, which is almost 10 percentage points up in today's trading session. HNIs have been set to accumulate the stock very aggressively in today's trading session. Of course, there was a price private equity deal with KKR and the promoters of Magma Fincorp almost 2 quarters back, and possibly the fundamentals have changed for the companies. What HNI is believing post the capital infusion by KKR, and the growth during the quarter will be quite strong, is what everybody is talking about.
Well, it's probably showing in the stock as well, Yatin, up 11.5%. So that's a strong show today by Magma Fincorp. Darshan and Yatin, thanks so much for getting us what the dealing rooms are speaking about in trade. Let's get in our technical experts, Deepak Mohani and Prakash Gaba, to speak about their sense of the charts. Gentlemen, thanks so much for joining in. Deepak, come to you first. And a couple of these stocks which are looking active on a day when the index is muted. One of them is a Tech Mahindra, the other one is a Magma Fincorp.
Well, Magma Fincorp began a move in the middle of October. It was pretty much sideways then. It's so far sustained pretty well. But this is not a very heavily traded stock, and but it is a breakout. It is a breakout not only from that 7-8 month range, but also from a 2-year range. So if market conditions remain good, the stock should do pretty well going ahead.
Prakash,
Tech Mahindra is a relatively new move because this stock has been languishing a little bit, but I think it's now finally beginning to gain some momentum. So at the moment I would say tradable, and for investment it's always been fairly good. One of the better tech stocks. It's been above the 200 DMA now for 5-6 months, unlike many of its other peers.
Prakash, come to you. On Tata Motors and the big bump up that the stock is seeing.
Well, Tata Motors has seen some kind of a consolidation at around 320 zones or so, and it's given a breakout yesterday at 320. Today's move is more of a continuation up move from there. Perhaps we can see a levels closer to 340. But as it keeps going higher, Tata Motors is likely to get some kind of an exhaustion out there in the upper region. But so far it's up. If someone is trading long, can continue trading long as long as you have a stop below 330 and trade long on the upside. Target of 340.45 is a possibility.
A space that was extremely active yesterday, Deepak, was the oil marketing companies, BP, HP, IOC, but HPCL in particular was extremely active. And somehow, I mean, I may be wrong, I don't know the statistics, but the last 15 to 30 days, I somehow get a feeling that HPCL has shown relative better strength than an IOC for sure, but possibly even to a BPCL. How do these stocks look in the charts, particularly HPCL?
Well, if you look at just 1 week ending today, HPCL is up 13%, whereas BPCL has got a much smaller gain of 5%. So it's really going 3 times as fast almost. And IOC is also actually going faster than BPCL at the moment. I think it's become more of a catch-up play for these two stocks. BPCL having done, gone ahead of them pretty comfortably in the last 1 year or so.
So what would you do with an HPCL, Deepak? Would you buy it?
I would hold it, and because it's already up for a couple of sessions, buy it after the next dip. And as far as trading is concerned, this is certainly a stock to look out for intraday trading because of the current momentum. It would be in fact one of the better intraday trades in the market than most other stocks, not just the petro majors.
And the shipping space in focus as a whole, because the largest player has decided to increase freight rates by close to $300 for a 20-foot container. And this is essentially to offset the increasing operational costs. I believe they've applied on select routes for the same, and I think it will be effective from the 1st of Feb. There's also talk about some more contracts coming the way of the shipping space, shipyards possibly, but just indicates the kind of mood that probably the industry is in. Let's get in Mr. BK Mandal, excuse me, the Director of Finance of Shipping Corporation of India, who joins us right now on the show. Mr. Mandal, really good having you, and thank you so much for taking the time out. Good having you. Give us a sense of this.
Thank you very much for inviting me.
Okay. Give us a sense of this increase in freight rates that you have announced. And I believe it takes effect from February 1st. Is it essentially only to offset the operational costs and therefore will only look to maintain the operational picture at the current status, or do you think there could be some more upsides to the operations picture as a result of this hike?
You see, shipping has been going through a very bad patch for the last 2-3 years. In fact, in all segments of the shipping, things are quite bad. And we have only here talked about some increase in the freight rates in the container business, which is the retail business. This is just to offset the cost increase, cost hike, the bunker price hike, and related factors actually. So essentially, this is not a move to really, get into the area where we have a lot of comforts, but this uncomfortable situation we want to overcome by virtue of increase of these rates to the extent possible.
Do you see more such hikes going into the year?
Well, not immediately, but going forward, you see, after all, shipping is a very cyclical industry, and it's very global industry by nature. I think no industry will be, affected globally. I mean, anything happens in the macro environment, it affects us. Whether you talk about the movement of the ships, or you talk about the manning of the ships, or you talk about the financing of the ships, we are absolutely globally aligned. So we have to always look out for the global movements, global factors, and accordingly take decisions. It depends on the competitions in each area, and like that.
Mr. Mandal, you mentioned that it's been a bad patch for you, and if I look at your Q2 results on a segmental basis as well, it was fairly bleak for the liner and the bulk segment. I think the offshore segment was probably the only bright spot. Has that trend continued into Q3, and do you believe that could well be the picture for the year as a whole?
Well, as far as the liner business is concerned, we have restructured our business to the extent possible, and we hope things will slowly get better. And as far as the tanker business and the bulk carrier business are concerned, I can only talk globally. I cannot talk specifically for SCI. Globally, what is happening is that things are still depressed, but there is optimism in the air, and we expect that things will slowly move up. And 2013, I hope that 2013 and by the end of 2013, things will go in a positive direction.
What's your fleet composition looking like at this point in time? Are you looking at expanding fleet?
Well, at this point of time, we have 80 ships that we are owning with a deadweight tonnage of about 6 million. And we have about 17 ships on order, and we will be slowly getting these deliveries. We have taken some deliveries in the current year, and in the next year too, we are expecting more deliveries. So one thing I can only mention here is that over a period of time, the SCI's fleet has been renewed, and they have become very modern. Our average age of the fleet today is just 11 years, compared to the all India, the Indian shipping average age of ships of about 18 years. So we are very happy about it, because the younger age of the fleet means acceptability in the market, better acceptability, lower fuel consumption, and so on, and lower repairs and maintenance too. So we have a big picture that as soon as this upside starts, will be the most important beneficiary, because we have already renewed our ships and our average age has come down drastically.
Great. Before we let you go, Mr. Mandal, the last time that we spoke to Shipping Corporation of India, one of your colleagues or ex-colleagues, as the case may be, did mention that it will be probably three odd months before some decision is to be taken with regards to SCI buying stakes in shipyards, or shipyards, so to say. How far or how much further progress has been made on that front?
You see, as far as the diversification strategies are concerned about any shipping company, what I would like to mention is that because it's a cyclical industry, it's very important to be diversified. Within the shipping also, we are diversified. We have presence in all segments of bulk carrier, tanker, offshore, and we are a niche player in the LNG market. As far as the going beyond the shipping fold is concerned, this time is, I would say, is that it's not the time for any big bang diversification. So at this point of time, I'd not really like to go for a big bang diversification like in the in the areas that you talked about actually.
So, Mr. Mandal,
but we do have long-term plan and long-term strategies, And as per that, definitely we'll look out for those things maybe after some time, not immediately.
So, is it safe to assume, before we let you go, sir, is it safe to assume that for the next 12 months, at least in the calendar year 2013, there will be no plans for Shipping Corporation of India to take a stake in any shipyard company in India?
Well, I think so. I think so.
And we take your word for that, Mr. Mandal. Thank you so much, sir, for taking the time out and joining us and giving us your perspective. Have a better quarter. We'll, of course, talk to you post your numbers. That's Shipping Corporation of India. Well, clearly ruling out any kind of stake purchase in any shipyard company. Okay, a couple of news bits. One on the block deals, 2.2 crore LIC Housing Finance shares. I think that comes to maybe around 4% of equity, if I'm not wrong. At a price of 280 per share, have changed hands. So that's a large deal, large size deal that has happened. I'm guessing this has happened in multiple blocks, but 4.2% of equity, yes, indeed, has changed hands on BSE. Okay, on to more news and exclusives, and I think it's in a company called Techno Electric, and Avan has the details on this one. Avan, tell us, what is it that you've got?
Well, Neeraj, from our sources, we understand that Techno Electric subsidiary, that Simran Wind project, has been in talks with a number of funds to invest in the company, and sources close to the company indicate that IDFC has now been shortlisted to invest about 300 crores into the company. IDFC, we understand, is going to pick up close to 20% stake in Simran Wind project, which is now going to be valued at a total of 1,300 crore rupees via this transaction. The deal in terms of the timeline is likely to be closed by the end of February, and from what we understand, the due diligence with IDFC is currently underway. In terms of their total wind generating capacity for Techno Electric, it currently stands at 207 megawatts. You have 162 megawatts of capacity under Simran Wind project, and the remainder 45 megawatts is with Techno Electric. Now, via the proceeds of this deal, Simran Wind, we understand, will add close to 100 megawatts capacity to the company, and the total market cap of Techno Electric stands at 1,069 crore rupees. This will all go well for the company. It has a total debt of 400 crore rupees, Simran Wind that is, and Techno Electric has a debt of close to 200 crore rupees. So this news is going to all go well, and our sources indicate that IDFC is going to invest 300 crores in the company.
All right, Avan.
No, actually, just one question, Avan. Did you mention that this deal would value the subsidiary at 1,300 crores? Because I just look at the market cap of Techno Electric, it's at close to 1,000 crores. So the value of the subsidiary is more than the value of the parent itself.
That's right. It's currently at 1,000 crore rupees, and from this deal where they're going to pick up a 20% stake in the company for close to 300 crore rupees, the total value is going to be 1,300 crores via this transaction. And we also understand from our sources that the total wind capacity for the company could be close to 400 to 500 megawatts over the next 5 years, and on the back of this deal, close to 100 megawatts could be added.
Timelines for this, Avan? If I'm shooting this out of the dark, but timelines?
Well, fair end, as pointed out, and it's probably going to be trickling into March, but probably by fair end, given that the due diligence with IDFC is currently underway, perhaps by the end of February to close to the beginning of March is when this deal could culminate.
It's making the stock react all right, Avan. Thanks so much for taking the time out and giving us that news bit. So that's Avan Dabash with that exclusive piece of news on a stock which is not too liquid normally, but just about a few shares started to trade, 5,000 shares now, 1.5% higher for Techno Electric. So the news is that there could be a PE investment into a subsidiary which would value the subsidiary at a higher level than the current market cap. I'm not looking at the EV per se, I do not have the debt details with me, but it values the subsidiary more than the current market cap of the company. It's happened in the past, it's happened with a lot of infra companies as well, so nothing new. But yeah, in a wind company, it's happening. And IDFC, I believe, is what Avan said, is going to invest 300 crores in the subsidiary of Techno Electric. Okay, 1.5% higher for that one. What about individual investments? Let's get in our technical expert to speak about their recommendations currently. And Prakash, to you first, what is it that you're recommending in the session today?
I think I'll go for two longs and one short, starting with GAIL. GAIL looks to be okay, can climb to levels closer to 385 or so. I've seen a good breakout today. Have a stop below 372 and trade the long side. Second stock that I like is IndusInd Bank. Has seen a good consolidation and finally a breakout has come in. Stop below 438. Should take it to levels closer to 450 plus zones. So IndusInd Bank also is a buy. Well, there's a 2 buys. I'd like to short sell Hindalco. Hindalco looks weak. Some kind of an exhaustion pattern up there. Have a stop above 134 Hindalco. We should be able to see a slide to levels closer to 128. So Hindalco is the sale.
Okay, that's a quick call from Prakash. Deepak, come to you. What is it that you'd be recommending?
2 short-term buys and 1 intraday short sale. The 2 short-term buys are Petronet LNG with a stop loss of 165, target of 174. This has moved up to a multi-day high today, fresh move. It had dipped yesterday. So this is the first of the buys. Then IndusInd Bank, which is always making upward moves every now and then. This is one of those times. Stop loss of 436, target of 460. 1 short sale, purely intraday, Voltas, which is refusing to participate in any rally. Stop loss of 108, target of 104 intraday.
Okay, thanks for those recommendations, Prakash and Deepak. Let's go across to our research desk. Syntex will be announcing its third quarter earnings, and while there has been some controversy on what's happening with the strike situation, Megha now joins in with a quick perspective on what we can expect from the numbers.
Well, Tanveer, of course, the strike was something that was reported yesterday, and the management's clearly clarified that there's not going to be any operational impact on the company. And for now, ahead of the numbers, the stock is looking pretty steady in the session. What we are expecting is a pretty decent quarter for Syntex Industries. If you look at the top line growth, we're expecting a number close to 1,208 crore rupees, which would be a marginal jump of about 4% on a year-on-year basis. Remember that the financials, and we are working with the low base in the same quarter of last year. However, at the EBITDA level, definite improvement in performance. We are expecting EBITDA growth of about 14.5%, coupled with margin expansion as well. So this time around, margins are likely to be around that 15% mark. The PAT as well, after stripping out the forex component at least, it's expected to grow by about 9.5% to 80 odd crore rupees versus 73 crores of the same quarter last year. Remember that the monolithic business has been under pressure for the company, as has the custom moldings business as well. So those 2 segments are going to be key monitorables, as well as the working capital requirements. That's also going to be important as well, because that's been exerting a fair bit of pressure on the company's numbers, and analysts are expecting that the working capital will continue to remain at elevated levels. In addition to that, the forex adjustments as well are going to be important. Remember, the company has a forex loan and an FCCD to be repaid of about $290 million. That's by March of this year, and the company has of course mopped up all the funds for it, but nevertheless, remember that they posted a forex gain in the last quarter. This time around, we'll wait to see what sort of forex adjustment is there.
Great, Megha. Thanks so much for getting us that quick preview on what Syntex might do. Deepak and Prakash, thanks so much for joining in on this leg of Hot Stocks. Afraid we are out of time completely on this show. From Tanveer and myself, thanks so much for watching. Up next, on the other side of the break, it will be Traders 20.